Welcome to 101. I'm Rick Kaplan, and my guest today is Wayne O'Neill of Reset. Good morning, Wayne.
Good morning, Rick.
Yeah, all the way out in Texas. So
I know.
yeah,
Good to talk to somebody from New England, though.
Are they dealing with all the same COVID-19 as we're dealing with here?
We are. We're definitely taking the more cowboy approach, and we're not as hard hit as maybe some of the East Coast cities, but we're slowly venturing out. So we have a pretty thoughtful governor who's kind of opening up the state a little bit at a time. So it's a little bit different though than what you've been through, and definitely New York City.
Right into our what Reset really does, and and maybe you can tell us a little bit about what Reset does, and also why is it dangerous to wait right now before we get back to normal?
The joke I'm telling a lot of people that I talk to is that I've got a lot of new best friends, because what we've been doing for the last 15 years for both especially institutional owners and particularly service providers in design and construction is we've been able to show them how to move scope along where some of that scope for those particular institutions seems like it's stuck for a variety of reasons, mostly for financial reasons. So we're facilitators of that. And now with COVID-19, that's become a particularly big issue. So, the question that you asked me before of why should we not all wait? Well, here's my experience. I've been on more Zoom meetings than I've ever been on. It's not that I wasn't doing video conferencing before, but I would say that every day I'm doing 2 or 3 of them with owners to try to figure out how to help them through all this. Here's why we all can't wait. Most owners have fallen off a cliff. And whether they're in healthcare or they're in higher education or they're in some form of government, they have to find some way to stand themselves back up. It's not only a revenue issue, but it's a customer issue. It's an employee issue. And they're just, every plan that they had before is just gone out the window. So you can't just like the next master plan and how do we get to that? That master plan may have just been scrapped several weeks ago, and they're trying to think much bigger. So that's why I see that we can't wait.
Well, that's probably a good reason why we can't wait. And so,
right.
A lot of people are kind of confused about sovereign wealth funds.
Yes.
So sovereign wealth fund, they're still investing in American companies, and what are the criteria they're looking to meet?
Well, they're sovereign wealth funds, and for that matter, foreign pension funds. Both of those are large seas of money, if you will, that are interested in investing in American infrastructure, because American infrastructure is seen as sustainable. And if you may remember from our previous conversations, it's really not just about investing in the real estate, it's investing into net operating income structures. So whether it's mobility or power or even simple things like water and wastewater resources, they can't get that money into the US quicker. Their horizon for investing is more like 30 to 50 years, and their definition of success is a much lower IRR. And so that money is actually poised and constantly trying to find its way into the United States. So that's really, and it's not that people don't know it, but we've had a 20 to 40 years of kind of going to the same solution: the bond market, the REIT market, traditional bank financing. So leveraging people who think in terms of 30 to 50 years is different, particularly for institutional owners. So,
well, I also think sovereign wealth funds in this country, anyways, they were never looked at as a viable source for them because there's so much local money available.
Right. But as you know, that's changed, and I mean, The bond market hasn't gone away. It's just in chaos. Traditional bank financing hasn't gone away. It's just in chaos. And so, as everything kind of freezes up, you need, I actually think it's just an opportunity to look at, so why would the Norwegian Sovereign Wealth Fund really be a viable way to stand my healthcare system back up? It's green, it's money, and it's interested in long-term investment. You're not going to end up owning any of the assets. It's just really about, again, a net operating income transaction. But it's new. I mean, this is not, what I find is this is one of those things where you can't sell. You have to, and you can't necessarily even educate. You got to let people buy a little bit at a time. Like just the way you asked that question. So why are they interested? Well, where have they been before? Why and why now? Some of it's the crisis, but some of it is also that on the international money markets, there's two things. There's yield and safety. And the United States, we should be really proud, is just one of those places on the planet that looks like the best for long-term yield and long-term safety. So I hope that's direct enough in answering you.
So now you could help them with guiding them through the whole process of getting the funding.
That's correct. That's correct. And that's part of what we do. I mean, it's a facilitation process. I mean, it's not like you can't go to Wall Street on your own. There's very large firms, Macquarie, QIC, Cantor Fitzgerald, but their investor connections are really where the story starts. And so that facilitation of how do you find those people that are interested in investing, and then how do you connect them to your institution or your system or your higher ed campus, therein lies the craft and the art of what we do.
How long is most times the process to get the funding? Because right now we're going into a period where companies have become cash poor very quickly. So they're gonna be looking to be able to regain some strength with funds pretty quickly.
Yeah, I mean, this is a form of really public-private investment. But what I like about this is it's a pretty quick turnaround process. If you just analyze let me just give you the view on mobility, because that's the discussion that we're having with most healthcare systems today. It doesn't take us more than about 60 days to get an assessment of, so what's the potential here for $200 to $300 to $400 million we could dump on a system. Then relative to finding investors that'll take it, it's probably another couple months. Can it go as long as 8 months? Yes, but the big advantage of concession funding, and that's really what that is the speed. My firm has the analysis down pat. So all we need is an NDA to kind of get all that started. But then the process of kind of, matchmaking, if you will, the investor to the system, that doesn't really take that long.
Well, that brings us.
We already know what they're asking. I'm sorry.
So this is going to be a two-part series. This is the first part, which we're talking about some, but we're going to go into the second part, which would probably come out in another week or so, where we'll be discussing concession funding and how that would work, and show how certain cases are examples of how concession funding would go through.
I think the biggest thing that people will need to see is that this changes the way that you interact with your existing clients and clients you want to work with. You can't just kind of approach them of like, what's your next project and that type of thing. You really have to go deeper and have a more mission-driven discussion, because that will be important in the matchmaking process to make the whole funding process go faster. So, but we'll save that.
And yeah, maybe on the next part, the second part of the series, we can discuss a little bit more about that as well, because that could be
that'd be great.
That will be helpful points for people to know.
Yeah, I think changing that discussion is kind of the key to scope creation, and so we try to stay part of all that. We try to help our service provider clients. We try to help our owner clients. It's a matchmaking process, and it's not something where it's all about numbers and you just make a presentation and it's a take or leave it. It's a long-term negotiation that has to stay win-win even after the transaction is completed. That's what's also really important about this.
Well, I appreciate the information, Wayne. Always a pleasure to talk to you. And we're speaking with Wayne O'Neill. He's the CEO of Reset. And this is, I'm reminding everyone, this is a 2-part series. So this is part 1, and you'll see in about a week, there'll be a part 2 coming up with Wayne talking about concession fundings and how it works. Thank you, Wayne.
Thanks a lot, Rick.
Thank you for watching today's interview. If you'd like to be a guest, a sponsor, or even advertise in the New England Real Estate Journal, you'll find our contact information in the description box below. You can also find all our social media platforms so you can follow us, and please subscribe to our YouTube channel.